If you see what happened overnight, yesterday crude prices firstly fell around 6% in trade. Now this is the intraday move, and this happened post Wall Street Journal reported that OPEC Plus is looking to boost output by around 5 lakh barrels per day. Now if you see a context behind this boost in output news that had come in is the fact that there is already a recession risk looming over the market, and there are trends which are showing that the demand has been weak for crude, and in that context, if OPEC Plus would have boosted the output by 5 lakh barrels, it would have created a supply overhang, and hence crude fell around 6%. And post that, the Saudi Arabian committee come out with a news report, and they have not considered any such move in the OPEC Plus meet, and that's when the crude prices rose by around 7% from day's low. Now, why crude prices went on a downtrend? Now, this also, if you see, crude prices are declining. Firstly, because of the recession risk. Secondly, China has been tightening the COVID restrictions, because of which the demand trend from China has also been weak. And further, there's a possibility that US might increase interest rate, which could push their economy into recession, and hence there could be further weak demand coming in from the US market also. So what are the important dates that one needs to track when it comes to crude? Firstly, December 4th, that's when the OPEC Plus meet is with, and their focus is now on cutting more production, which could lead to higher crude prices. So December 4th is a date that one needs to watch out for. Along with this, December 5th is another date when EU is considering to ban Russian crude, and then there is December 13th and 14th when there is the US Fed meet, where they will consider the interest rate hike. Now, for India specifically, if you see the India crude basket prices have come down below the $90 per barrel mark for the first time in this financial year. From from October to April, if you see, crude prices were trading in the range of around 91 to 116, and now it's below $90. In fact, at around $85.33 per barrel mark, and it's beneficial for the economy because India sources nearly 85% of their crude requirement, and every $10 per barrel drop in crude prices benefits the current account deficit by around 0.4%. The retail inflation eases by around 50 to 60 basis points. Wholesale inflation comes down by around 125 to 135 basis points, and the trade deficit narrows by around 12.5 billion US dollars. For various sectors and companies, if you see, OMCs, Reliance Industries, they benefit by lower crude prices because the marketing margin increases. For them, every $1 per barrel drop increases the margins by around 40 paise. For oil explorers like ONGC, Oil India, Vedanta and HOEC, lower crude means lower earnings because that will lead to lower realizations, and every $1 per barrel drop in crude prices hits ONGC and Oil India's EPS by around 7 to 12%. And lastly, there is sectors like airline, paint, tire, oil, cement manufacturing and lubricant manufacturers who also benefit because oil is one of the major raw material, and lower oil prices means lower input cost for them.
All right.